Welcome to Cryptonite. This is our monthly roundup of all things crypto. And boy, this month has been a busy month for people both on the peripheral of the crypto space as well as people who have been neck deep in it. I think the biggest news for this month was the launch of Bitcoin futures ETF. So Tejasvi, what do you think about it?
Oh, what do I think about it? I mean, I guess there are people who are waiting in the sidelines who wanted to buy Bitcoin on their brokerage accounts, who wanted to not be involved in the custody and all the other nitty-gritties of Bitcoin holding. So, like people who want to just use their brokerage account. I mean, like somebody like my brother or somebody. So, if you have people like that, then it's perfect for them. And I guess it goes all the way up to institutional investors, pension funds, whoever it is. Hope they buy it. I guess they're buying it because apparently it's one of the best performing, or it's the most active ETF in the first 24 hours or 48 hours or something like that. But apparently it's some futures based ETF, and I'm not an expert in this whole ETF structuring business. And people tell me that because of that there is a lag in the price, and it kind of sometimes screws the investors over. Can you kind of talk about that part?
Yeah, so it's not really a lag in prices, and so basically the problem is the roll yield that we've spoken about before. So your front month futures contract is going to trade at a lower price than your next month futures contract. It is a well-known usual commodities because the whole thing is there's a term structure to it. So the farther out you want to take delivery, the higher the price of the contract today. And it's got a lot to do with funding costs and storage costs and so on. But what happens in the Bitcoin space is, would be interesting to see because there's really no storage as such, right? You're just storing.
Storage is free.
Bits, delivery as such, because you're just delivering bits. So you don't have to drive a truck, to some Cushing, Oklahoma or something. Deliver it. So technically, the only yield that you should be getting is just the funding cost, right?
Yeah.
So when you, so that should not be that big a deal, given that funding. I mean, if you look at the yield curve, the difference between say, say 1 year treasuries and say 20-year treasuries is like 2% or something. It's not that big a deal. Compared to the volatility of Bitcoin itself, which is like, it can go up or down 30% in a week. So it's
more than that sometimes. Yeah.
Yeah, it's got nothing compared to that. So I'm not very sure if investors will be bothered about that for now. It's a big deal in the regular commodity space, no doubt. But in this digital space, I'm not sure if that's such a big deal.
My question is, why wouldn't sorry to interrupt, but why didn't the regulators approve a spot ETF though? Why are they going with this futures ETF at all?
Because because of the regulators involved and who they foresee, right? The futures are listed on the CME.
Yeah.
The spot is not listed in any regulated exchange.
Aha.
Like nobody is responsible for. So when you look at who's responsible, right? So the US has this concept of the listed exchange. Okay, so I can go to NYSE and list, or I can go to NASDAQ and list, and that will be my listed exchange. Even though my stock can be traded in I still have a parent exchange who is responsible for making sure that I'm meeting all the compliance requirements, and also they have a very lucrative business of publishing the closing prices. The official closing price can only be set by the listed exchange.
Got it.
Okay, so yeah, so they have all these place. So CME is now official closing price of Bitcoin futures, right? And if they goof up there, the regulator knows who to catch. Whereas if you if you allow a spot Bitcoin exchange, who do you catch, right? It's traded in exchanges. So
no, but whoever is the exchange, the ETF sponsor, they will do the custody of the Bitcoin, right? And the point is, who actually gives the price is the question. That's the point.
Yeah.
Got it.
So that's, but I think the interesting part about this is, if you're bullish on Bitcoin, bullish right now, you should be hoovering up, pretty much all the Bitcoin you can find and you can afford, because in the US, right, these RIAs, registered investment advisors, they currently all of asset consumption. It's a gigantic amount. Okay, and so far they have stayed away and account for their clients, and making sure that those passwords are carefully kept in a SEC approved vault and all that shit. They still can't charge a fee on it. But the minute an ETF comes, they're like $4 trillion of assets or something, and they're all talking about a magic 5% allocation to crypto, and none of them really give two hoots about whether what is your philosophy, libertarian, nothing. It's like, oh, this asset is going up, and if I don't have at least some allocation to it, I'm going to get in trouble with my with my clients, and they're just going to buy this ETF and do it. And they've been resisting for so long because they couldn't charge a fee on it, right? As an unregulated asset. So now they can just buy this ETF in their client's account and slap a 2% fee on it and say, okay, here you go. You're welcome for my advice.
Yeah, great advice. No, the question is how do they ensure that the ETF actually holds the future contracts? Is there like a regulatory body that verifies that this ETF is not like for me, the thing is, I'm still coming from the libertarian perspective, where I still believe that because you cannot print more Bitcoin than the protocol does or allows you to, you cannot just get more and more Bitcoin into the system, so that you can't just inflate the amount of ETFs as well. But that only works if every ETF is backed by a Bitcoin or a 5 Bitcoins or whatever is the contract pricing. And is there a regulatory body that ensures that this happens, or is it like trust based or whatever?
No. So your futures has nothing to do with the supply of Bitcoins or the amount of Bitcoins out there, right?
Why not? It's supposed to talk about specific number of Bitcoins, right?
No.
The futures contract would be like if I have this contract, I have the right to buy 1 Bitcoin in 3 months or 2 months or whatever it is.
No, it is cash settled. So they just give you the differential.
Oh. They don't have to deliver the spot.
Okay, futures. So most commodities are not physically settled. They are all cash settled, and Bitcoin futures are cash settled as well.
Oh, so it's just a
compulsorily
synthetic. It's just a synthetic which tracks Bitcoin basically.
Yeah, so it's a pure synthetic, and so the risk is managed by controlling the open interest that is at any given point in time. So the exchange, it's at an exchange and clearinghouse level. Risk is managed, not at the it has nothing to do with the Bitcoin.
So what is my problem here? My problem here is, despite being an expert on Bitcoin, I'm already lost. I don't know what's happening already. Like, see, whatever you're talking about, I can understand the English words, but I can't really process them somehow.
Okay.
Like, the world of traditional finance is so opaque, so bizarrely crazy to me. Like,
okay, so let's say the total supply of Bitcoin is only 1,000.
Okay.
Out of which, say 500 has been already mined.
Okay.
But that 500 Bitcoins out there has nothing to do with the number of contracts that can be. So let's say each futures contract can reference only one Bitcoin.
Okay.
So for example, if the price of Bitcoin goes up by $1, okay, then this futures price goes up by $1. It's a 1:1 thing.
Sure.
But there's nothing to stop it. It can reference 5 Bitcoins, it can reference half, whatever it is.
Yeah, whatever it is. Some fixed number.
Yeah. Yeah, it's a fixed number. But what happens is that 500 Bitcoin has no relationship to the number of outstanding futures contract that you can potentially have. You can have 5,000 futures contract being traded.
How? Because each futures contract will refer to only one Bitcoin, right? How can you have 5,000 if there is only 500 Bitcoin out there?
Yeah, so the thing is, first of all, you ensure that these futures contract can only be cash settled. So if I buy a futures contract, I'm not entitled to take delivery or force the seller to give me an actual Bitcoin. Okay. So the seller is only responsible for giving me the price differential. So if Bitcoin goes up by $1, he's only responsible for giving me that $1, not the actual Bitcoin.
Oh. So hang on. So it's like basically speculating on any instrument, really, in some sense, basically.
Yeah, this is how derivatives work, no man. So if you look at, the irony of this is Bitcoin came up because of, the global financial crisis.
I know.
Caused by derivatives, right? and the funny thing about, the specific derivatives that caused it, credit default swaps, there are trillions of notional outstanding, right? But the actual underlying assets is in billions. Like hundreds of billions of assets are referenced by trillions of dollars of derivatives in notional. So the way the risk is managed is basically, the clearinghouse only cares whether the counterparty can exchange that $1, that in fluctuation.
The change in price at all.
Yeah. So it is mostly to do with, the number of outstanding contracts is mostly a function of the volatility of the underlying asset and the amount of money that the players in the marketplace can put up as collateral, right?
Okay.
So if I have, $100, then I should be potentially able to, write, 10 Bitcoin contracts, assuming that Bitcoin price doesn't go up.
I feel like throwing up. I feel like throwing up. I'm like. Like for me, I just assumed that there was some notion of how I was being naive about it. I was totally being naive about the idea that, so that's the reason why they can't do spot ETFs in some sense, probably, because spot ETFs are not.
It goes back to the problem I mentioned earlier. I mean, there's nobody responsible for the spot asset, right? So if Bitcoin if Bitcoin was backed by a real company or like a group, right?
Yeah.
And they go to NYSE and say, I want to list this here, and this is going to be my primary exchange. Then NYSE is now responsible for policing that Bitcoin.
No, but that I'm not so sure about it, because right now, let's say the stock of Google is listed, I think, in NASDAQ, maybe that's their primary exchange. But the price of Google is set across the world in different exchanges, right? It's not like NASDAQ is the only place where the price is set.
But for the purpose of risk and and compliance, what matters is the closing price. Okay, and the closing price is an auction process that is conducted by the primary exchange, the listed exchange, the listing exchange of Google.
Oh, wow.
So if Google is listed in NASDAQ is responsible for the end of the day,
but
auction process.
In crypto, there is no end of the day as well. What is the end of the day?
Exactly. So the thing, what is going to happen, I think, is this Ethereum, right, which is VC funded, and there's a foundation behind it. They are the ones who are capable of actually getting this listing done. So they'll go to NASDAQ crypto. NASDAQ is probably going to have a crypto exchange soon. Okay. It'd be idiotic not to have it. So either NASDAQ is going to do it or ICE is going to do it under their umbrella, and they're going to have crypto exchange. And Ethereum will go and tell them that we are this foundation. We are going to do this. These are laws that we think apply to crypto, and we're going to follow them. So if they can force the hand of SEC to to allow this, so to speak, then that particular NASDAQ crypto exchange will be the listing exchange of Ethereum, and they will set the closing price, and you will have an Ethereum.
What is the closing price? What is the definition of the closing price?
So there will be like a 3:30 to 4 p.m. is when all the players in the market get together and square off their intraday positions at, that are supposed to be closed at close.
Aha. Okay.
Okay. So during this process, you're going to decide, what is the official close of that asset.
Okay, so I have to still figure this out. I mean, I have been living under the rock in terms of how the traditional financial infrastructure works, I guess, because you just assume that these things somehow magically work, and once you start digging deeper into the mechanics of what actually happens, because I think
the key thing to note is if you open your TD Ameritrade or whatever broker, right, there is an order type called trade at close.
Aha.
Okay. So you can basically buy or sell at the close, which basically you're giving up your control of the price and saying whatever the official closing price is, that's it for me.
Okay, and that's now, like a that's like an artifact. Yeah.
Including your Vanguard and all that. They are one of the biggest players in this closing game.
Aha.
So to speak, because they have the ability to swing swing this one way or the other, and those ETFs also. They, especially for Vanguard, they also have those index funds, right? Which need to publish end of the NAV, at which all trades, all open trades are orders are closed for them. So that official NAV is derived from this official closing price. So it matters a lot for them.
Wow.
So that's why. So without an official close, you cannot have an official cash Bitcoin ETF.
Interesting. So the futures ETF is the way to go, and there is no end to the amount of speculation that can drive.
No, because see, the way the US markets work, right? They already have options on this bloody ETF.
Wow. On top of this.
So you have Bitcoin, then you have Bitcoin futures, then you have Bitcoin ETF of those futures, then you have options on that.
you could be doing the same thing in The Big Short. He sets up these Jenga, right? Wow. Okay.
Yeah. Once again, the number of outstanding contracts of that options on that Bitcoin ETF has nothing to do with the actual number of Bitcoins that can be produced or not.
Meet the new boss, same as the old boss.
Yeah. And I think I had told you this before as well. So the minute any asset gets financialized, right, all their old correlations break down and they end up getting pulled towards the correlations of the stock market.
But then every asset can be financialized, right? There's nothing preventing from any asset being financialized.
So you have to find something in some really niche that nobody gives gives two hoots about for it to be not financialized. But technically anything can be. So when I was at Merrill, right? So one of the things that was financialized was reverse mortgages.
Sure.
Okay. And I thought it was bizarre because you're kind of betting on when the other guy is going to croak.
Exactly.
and that's the root of all the analysis you can perform on that. And I was telling my boss that this feels a bit kind of sweaty for me.
Morbid.
And he's like, wait till you so I forgot what it was called. Like people can actually give up their life insurance. Okay, so they can securitize this reverse life insurance, and it is a direct bet on when that person is going to die. I forgot what it was called.
I don't want to know the name of this instrument. I don't want to Google this. I don't want to get depressed. Like, Bitcoin is supposed to give me hope.
Yeah. Well,
anyway, this is how it is. So in other news, did you see that there is a token called SHIB, SHIB,
okay,
which is supposed to be this dog token, it's kind of cool because we talked about NFTs before.
and not NFT, sorry, Dogecoin. And in Dogecoin, the Doge meme was supposed to be based off this breed of dog called Shiba Inu. And then some dude obviously made a token called SHIB itself. And now that token's valuation, whatever that is, has beaten Dogecoin's valuation. And it's like this bizarre place where there is a joke coin, and the joke of the joke is more valuable than the joke itself now. And that just goes on to show you that these memes are, there's no end to the memes themselves in some sense.
It was hopeless. And you thought, how is this any better? So the SHIB coin has an interesting history, right? Because I think it was donated to the COVID relief fund.
That's true. That's a separate problem as well. Because there is this article by somebody who talks about how difficult it was to liquidate the SHIB that was given to the COVID relief fund. Apparently the valuation it started off at was $1 billion. And then eventually they were able to get approximately, I don't know, 300 million or something into like some sort of a liquid dollar account. And apparently then the not-profits went to these guys and asked for actual real dollars coming out of there. And it is still a bit of a mess apparently, because the taxation structure is not clear. It's not clear who's the arbiter of the funds. It's not clear where it's actually going and what's actually happening. I have a feeling if you dig deeper into it, there is a bit more skeletons coming out of that one as well.
Yeah, so this is one of the biggest reasons why I've stayed away from actually transacting in crypto in India, because you don't know, some bizarre shit they're going to do with their, their rules. So recently, I don't know if you're aware. So yesterday, right? IRCTC, which is the
railway booking guys. Yeah.
Yeah. So the government just asked them to split the convenience fee 50-50 with them, just like that, out of the blue.
But they're a publicly traded company, right?
Yes, but government still holds some 67% of it or whatever. So they just asked them to do it. And the worst part is IRCTC had, yesterday it split, the stock split.
Oh, on top of that, okay.
Yeah. So a lot of guys would not have will only receive the shares, like probably a couple of weeks from now, okay, to actually trade.
Sure.
Okay. So till then, they're still, if it is a 1:5 split, they still have that only one share.
Sure.
They can't.
Yeah.
They can't even liquidate their own portfolio. And this was announced, after the close. Okay. And everybody basically, whoever was, owned this IRCTC probably did not sleep that night. Is
convenience fee the biggest revenue they get, or what is the deal there?
Yeah, it's the biggest revenue, right? So is the charge for allowing you to book railway tickets on their website.
So basically, their revenue stream got cut in half.
And yes. To no one's surprise, the stock tanked. It opened -10% and it tanked -25%. Okay, so it's like, forget about the revenue that they collected is like chiller compared to the market cap loss in the stock. And it was the decision, but damage is done, right? So my point is that these bloody babus and government, they care two hoots about your mental health or well-being. They will do some nonsense, and you'll be screwed for life. So unless the parliament can and you cannot do, it's best to stay away from it if you value your mental health. But the problem is that in India, every exchange has millions of dollars on advertising that platform, and everything from WazirX to some Coin DX, DCX, something.
Coin swap Kuber or whatever it is.
Coin switch. They are all advertised, and with all these Bollywood celebrities, and the only thing that they are pitching is the rate at which the price goes up. So that is the entirety of their pitch. And the guys who are onboarding on this have no idea what it is. They only are seeing this price go up, and they're like, I want this, right? And they're all like small. Most of them are like 5K, 10K accounts. But in the aggregate, they're just mind-boggling. Like, I think the dam, right? So even if the government says this is illegal and of whatever profits is made as taxes, how are they going to collect?
No idea what they're going to do.
It's impossible to collect.
Yeah.
So let's see. Hopefully this monsoon. I think the winter session is going to happen now, and
what do you expect?
Let's see if they do something like that.
What do you expect from the winter session anyway?
So they have this crypto bill pending for months, and nobody has actually seen it.
Okay. No, but I don't see any. I don't see any clarity coming in terms of regulation anyway.
Only rumors, but one way or the other, it should be done, right? So they can just call it a commodity and say, we're going to treat it as any other commodity listed exchange, and it's going to be regulated by SEBI, and this is it. So everybody will be given 6 months to, figure out the formality and get themselves compliant.
Okay. No, because there are so many random other bills pending in the winter session. I don't see how crypto will get the priority that it deserves, maybe.
I don't know, but the dam has definitely burst here, and it's one thing to have like a few rich dudes who are jobless, just speculating, versus thousands of guys putting 5K.
But is it true that it's actually thousands of people? I mean, I heard some study which was done by some broker choice company or whatever. I don't know who the actual study was by, which said that India has 10 crore people who have invested in crypto. That sounded like a lot to me, and I was not sure whether I could believe that.
I think it is more than that, because I doubt if these crypto exchanges are actually creating wallets for these guys. And
no, but even the crypto exchanges themselves, do they have those many accounts? That's what I'm surprised by.
Yeah, they do. They even published, recently the amount of transactions that have gone through those exchanges, and I don't think they're lying. I mean, why would they lie?
No, but that makes them bigger than these crypto exchanges are now bigger than Zerodha and stuff. That sounds unbelievable to me.
Look, I don't know. See, I keep getting all these spam messages for Rummy, and 10,000 rupees has already been credited to your account. Click here. So these guys, you do that, right? Zerodha cannot do that. So all these guys, growth hacking or whatever that shit is, and guys would have just clicked on it and gone off over there. Wow. And there is no KYC, AML, and all that, right? It's just like, okay, we're going to take a photo, smile. Okay, hold up your Aadhaar card. So these dumbasses would have held up. Okay, finish. Now account open. Gambling shuru.
The casino is open. Man, I am like I feel so desperately helpless right now, because the whole point of this was to not do this. The whole point of crypto was not to do this. The point of Bitcoin was to be against the institutions, not against the common man. And now you have to go to the institutions to save our asses now. It's like ridiculous.
Yeah. So I don't know, man. So it's I would just say it is what it is, and it was bound to happen, because I told you this earlier. Wherever there is money, there's going to be there's
going to be greed. There's going to be madness. No, but speaking of money, Bitcoin also happened to hit the all-time high this month as well. It apparently went up to, I don't know the exact number, $66,000 something dollars. So I track it in euros here. It was cost 56,000 euros, which was like a big deal. It even apparently eclipsed the market cap of the Swiss franc, which is kind of personal to me because I live here. And then this whole notion of whether the market cap is truly the market price in some sense. What I mean is, for example, the Shiba Inu token, somebody has, like, let's say $5 billion worth of Shiba Inu tokens. Can they liquidate it at $5 billion is the question. I don't think so, right? Once they start selling it, the market price will start collapsing.
Yeah, absolutely. So there's no depth in that market, and I think a few traditional finance guys were discussing this a couple of days ago, because there is one wallet which has some $8 billion in Shiba Inu tokens or whatever. It's worth 8 billion, and they were trying to figure out if that guy liquidated all this, how much he would actually get.
Exactly.
And the thing is, he's put like $8,000 in it. So even if he gets like 10 million out of it, his job is done now, man.
I mean, the numbers are obscene. It doesn't make sense.
It doesn't make sense. So so if I were him, I would just pull the hell out of this rug. Just do a rug pull, dump the whole thing in one market order. And say thank you for playing.
I'm going home in my Lambo. No. So here's my point to you. Like, you are a classic traditional. I would say, for what it's worth, I'm not traditional in the pure sense, but you're still from the regular financial market, and you are looking at the factors, all the factors that affect investing. You're looking at momentum, you're looking at value, you're looking at the counter-cyclical nature of stocks. You're looking at all the stuff that people have been looking at for the last 100 years. And then there is this other industry which doesn't make any sense. How do you deal with it? How do you think about it? What is your how do you sleep at night, so to speak?
So I think of it as every generation, okay, has its tulip. Okay, so this is our generation's tulip. It is going to be, so if you look at frauds, I wouldn't say fraud, if you look at manias, right? The tulip mania was localized.
Yep.
Okay, so the South Sea bubble was bigger.
Yep.
Okay, both geographically as well as in size.
In scale,
and progressively, all these manias keep getting bigger, both in geography as well as size. Why? Because technology. Okay, so as technology advances, you're going to keep blowing bigger and bigger and bigger bubbles. And our generation, I still remember. I used to date someone who would look for MLM schemes that were just getting started,
like in the beginning stages.
Yeah, and try to figure out if they're going to be successful or not. Okay, and go and join it. And
while knowing that they are MLM schemes.
Yes. So her whole thing was to was not to actually buy the product or sell it or whatever. Her whole job was to recruit other people.
Oh, okay. Wow.
And she had this network, okay, who would trust her. Even now, it's bizarre to me that she has something like 10,000 Facebook friends or whatever, right? So, the scale at which she used to operate was mind-boggling for me even at that point. And I'm talking about 2000 early.
Yeah.
2000 to the top, isn't it? So, that was what she was looking for, and our generation's MLM scheme, and and charged with technology and money, and like in every bubble, there are always going to be so-called experts who are going to tout, how this is cool. I mean, I'm not. Look, you're in it for the tech, which I respect.
Otherwise, we wouldn't be having. That's the meme. People will keep saying that I'm in it for the tech, but while they are in it for the gains, so to speak.
Yeah, that's fine, but you really are in it for the tech. So you're not in it for the meme.
Yeah, I am. That's why I'm so pissed about this world in some sense.
So if you take a look at what is that Dallas Cowboys owner?
Mark Cuban.
Mark Cuban, right? So there are always going to be Mark Cubans of this world who are going to pump shit coins, altcoins, whatever you want to call them, and every bubble had that. Right, so some well-known authority, semi-authority, who would put their stamp on it and say, it's okay for you to do this because I'm that, and you and I are doing the same thing. So the same thing all over again, man. And this mass, this for one thing, none of the earlier bubbles were a waste. Okay, so there were some things that came out of it. So so we are talking about manias here, but if you look at railroads in UK, for example, right? So there was a mania there. Railroads in the US was a mania. Canals in the US was a mania. So each mania draws in capital. Most of it gets incinerated, but some of it goes into creating permanent infrastructure.
Yes.
So I expect the same thing to happen here. So the guys who are going to benefit from here are the guys who are already in the establishment. So I'm talking about Coinbase, for example. So they are the ones who are straddling both the mania part as well as the the traditional finance part.
Yep.
So they have the backstop. So when this blows up, right? So it's very highly unlikely that Coin may go out of business. So maybe their equity gets wiped, but they will survive.
Yeah.
But and FTX for to survive. So they have set up all this massive infrastructure, and they've got their hooks into all these high frequency trading and all that stuff, which deals with traditional finance. So they will be fine. But the guys who lose fans $5,000 in Shiba Inu coin. So those are the guys who are like the bakaras of this game,
those are the guys who are supposed to protect them. Those are the guys who actually were supposed to be protected by this, they're, and here's the deal, right? At least at some level, they are not trying to hedge against inflation. They're just trying to make more money. So if they get screwed, it's kind of okay in some sense, maybe. Who knows, right? They're calling it upon themselves. I don't know who is in it to fight inflation or who is in it to fight central banks. Maybe I'll be the one who's going to eventually hold the bag, I guess. 25 years down the lane, I'll be equivalent to Ron Paul talking about end the Fed or whatever.
But see, even Zerodha, right? Traditional finance, most of the new accounts being opened, they hardly have like 5 or 10 grand in it, and they're all looking for a penny stock kind of a thing where they can invest that and just bet on lottery tickets. So my point is that the human tendency to gamble has been around since humans have existed.
Yes.
Right. And that's not going away. And what has changed is the tech. So so the same meme or same thing just travels, all over the world in the blink of an eye.
And also, and the fact that it's gamified also makes it even more, I would say, addictive, for the lack of a better word.
Yeah, absolutely. And if you look at the history of these slot machines in the US, right? There's this company called Ball something. Okay, Bolly or Ball or something. They have a kind of quasi monopoly on slot machines in the US. So no matter which casino you go, you'll see that slot machine.
Interesting.
And the beauty of that is all these slot machines are connected to a central location.
Really?
Okay, yeah. So supposing you have, so your casino, you put in like 200 slot machines, right? Each one doing different things. So they make sure that the payoff, right, is both random as well as uneven, and they comply with the gaming commission's payoff.
Wow.
So the gaming commission says that all your slot machines in a casino should have X payoff. You can't just simply keep taking in money, but they make sure that the rate at which the payoff occurs makes you more addictive.
Of course.
Yeah. So they have figured this out, and they have a camera in each slot machine, which is looking at your facial expressions, whether you're excited and all that jazz, and doing this, right? And this is traditional shit, and and slot machine is probably one of the oldest, dumbest way to gamble, and they have done this. So I'm not at all surprised as to what is happening on the crypto front, because it's just an extension of this, but it's like rocket fuel, right? So
Yes.
They've used technology as a rocket fuel and flame this thing.
Yeah. No, I was also reading about how in some of these DeFi protocols and stuff, also because of the way that things are structured, there is also so much potential to actually get screwed as well by hackers, and there are all these exploits happening on all these protocols, and before you know, the money is also gone. It's just like taken away as well. On top of that, it's like old school Las Vegas, right? There's also gambling where you are losing money, but once in a while you could be hit by a mobster and he just takes away your money anyway. So it's not even regulated in a sense where the mobsters are being prevented by the people, by the cops or whatever. Right? The mobsters are still walking around. So crypto is like gambling plus mobsters, which is that the entire thing is just you are like trading something to get something else, and you're trading that to get something else, and eventually you're just making sure that newer capital comes because you are marketing the hell out of it, and as long as newer capital keeps coming, it kind of sustains itself in some sense. Which is like a criticism that you can apply for a lot of these assets, but nobody's building a house, nobody's building a dam, nobody's inventing a new way of doing communication, or inventing a search engine or whatever it is.
Yeah, but I sent you that WhatsApp message, right? So there's a tungsten company.
I know, the Midwest tungsten guys.
Yeah, so that is bizarre. So basically, they're selling an NFT that gives you the right to go and see a block of tungsten in their office.
Hey, but you know what? I wanted to tell you about this on WhatsApp, but the deal is, there was a car which was done by Ferrari, like back in the early 2000s, called the FXX. It was not street legal, so you couldn't drive it on the road. So you had to go to Maranello, the Ferrari factory, and take it around their track, and then keep it back in the Ferrari factory. But you are the owner. So it's pretty much like exactly like that, right? I mean, you own the thing, but you don't really own it because you can't take it with you.
Makes sense. I mean, I don't know, man. Like I said, there's a strong parallels to what is happening, to what has already happened, except that you have this technology which has amplified everything.
Yeah.
And to make matters worse, you have all these, like with any sort of mania or bubble or whatever, right? So, or any new invention, you have all these guys who want to make a quick buck.
Of course.
And in the process, it's fine. They just take your money. But I think you shared a link about this world coin, which wants to scan your freaking iris.
I know.
What the hell is that about?
So that is actually even worse, because it's a VC funded thing from Y Combinator, which is like a very not Y Combinator itself, but the guy who started it is like this Y Combinator head honcho, which is a popular VC, I would say VC company maybe in some sense, and they have like a proper board, and they have raised like I think $40 million or something, and they want to make these machines that will scan your iris, and for each iris scan you will get certain amount of currency. And that's a way to prevent people from signing up multiple times. Of course, this is the same thing that Aadhaar tried to do, right? Aadhaar is like a way to get social security benefits in the Indian state, right, based on your retina scan. And the retina scan is going to give them the guarantee that no two people are taking the same social security benefits. And WorldCoin is trying to do the same. And I also bizarrely came across another project locally here in Switzerland, where they make sure that you have to go to these local meetups in person, and in the meetup you have to like sign some ceremony with each other, and the meetups are organized so that you can't run from one to another in that time. So you are physically guaranteed to like one place. You are physically there in one place to get the social security benefits or universal basic income or whatever that is. I think this idea that, and this actually is a very deep question, what you're asking, because I mean, so Satoshi Nakamoto in his writings actually talks about this, saying how it's inherently impossible or even immoral at some level to collect, to make sure that people are unique. Like it's difficult. Also, it's difficult, and it intrudes into their space. So we do away with that entirely and make it a completely computer thing. We say that if you have one computer, you get one vote, and if you have more computers, you get more votes. And that's kind of where Bitcoin went with eventually to kind of solve this problem. Which of course comes up with its own problems, where you have electricity and all this other jazz which comes with it. But eventually the idea that you cannot prevent people from faking themselves and getting benefits is, I think, a deeper problem that there are no real obvious solutions to. And scanning irises is even worse than not doing it. So it's like I don't know what the solution is, but I think Bitcoin solution is a bit unsatisfying. But scanning irises is even worse.
Yeah. So there's a book called Radical Markets.
Oh, I know. Glenn Weil and company, right?
Yeah. So my original attraction to this crypto space was because of that book.
Yeah, I know the whole Dutch auctions and all the quadratic voting and all that stuff.
Yeah. So I was thinking that if you apply this concept into into some of those problems that he has posed, then you can look at solving, like all these apartments have a homeowners association, right? They're all supposed to vote for stuff, but nobody turns up.
Exactly.
Because the stuff on the agenda doesn't like the sort of voting mechanism where they can trade between themselves and gets a shot at being heard at the top level. But none of that has been done. Okay, what has been done is basically speculation. So
no. So it's actually to give them some credit. I think Vitalik, the founder of Ethereum, he has actually, I think he wrote the foreword for the Radical Markets book as well, and he has a couple of papers with Glenn Weil and all these Microsoft researchers, and he proposes this idea of quadratic voting as a mechanism to introduce governance token distribution in crypto coins and stuff like that. So there is a bit of that. There's definitely some notion of radical markets coming in, but it's so far away compared to all the speculation and all the frothy mania that you almost would be like forgiven for not having noticed it even.
Everybody just wants to do technical analysis on crypto, man. That's it.
I had never heard of the phrase candle in a technical context before, in the Bitcoin context. And now people are talking about Bitcoin candles, and I was not even sure what they mean. I had to Google this term, and then I went down this rabbit hole of candlestick graphs, and there is this whole area of complete madness. They're just analyzing the price action. Who the fuck cares?
So candlestick is the weirdest of all chart patterns. So look. So the thing is, analyzing prices and volume and everything is required. Okay, if you want to run a successful trading op, you need to know what those things are. But that's not where you stop. Okay, so it's you start there, and there's a long way you need to go. Before you you kind of get a bearing on things. The weirdest thing about candlesticks is its history. Everybody is obsessed about the history of candlesticks, and that is somehow supposed to give it cred. So the history goes like this. Hundreds of years ago, there were rice merchants in Japan who used to trade rice futures.
Okay.
And they used these candlesticks.
Like literally candlesticks.
Use these candlesticks to plot prices of rice futures. And that's why it works now. That's why it works now. After like thousands, even hundreds of years, when you have like supercomputers, begin analyzing prices left, right, and center. I mean, I do candlesticks. This is a doji. This is an engulfing pattern. So this ate this, and this. Look at this tail. It is so long.
You're not joking, right?
It is true. You Google it.
I am done, man. I'm done with traditional finance. The whole point of getting into Bitcoin was to get away from this freaking madness. It's amazing that it's again back to the same stuff. But you know what? I think next month we will probably go into a different area. I'll see if I can talk about and write about Bitcoin mining, which I think is a fascinating area. And it's at least connected to the reality because it actually uses electricity, which is like a real thing. And the maths is, I can understand the maths. You can understand the economics of it. So let's talk about that. With that, I think we should call the end of this month's madness.
Yeah. All right, ladies and gentlemen, thank you for tuning into Cryptonite. So